The market continues to sell off and we have not found a bottom. What should we be looking for? Where could prices be heading? And let's kind of go over some levels that maybe, whether you're a trader or you're a longer term investor, you could be looking at. So what we're looking at here is the weekly time frame. But this selling realistically started towards the end of February, about February the 20th through the 22nd, when we lost the 50 simple moving average. And when we lost that 50 simple moving average, it's very, very significant. You want to be risk off if you're an investor, if you're trading below the 50 simple moving average. Now, of course, you always want to be, as a long-term investor, you want to be dollar cost averaging on significant areas of support. Some of those significant areas of support could be down around that 200-day moving average and other prior areas of resistance that could be forming as new areas of support. And what I'm realistically looking for here, because we have technically not seen a dead cat bounce. And I'm not talking about a little bit of green here towards the end of the day, which is just nothing more than short covering towards the end of the day. I'm not talking about maybe one, kind of sell off and then we kind of close green on the day. We have yet to really close over on the daily time frame, and I'll get to the daily chart in just a minute. We have yet to really close over a previous day high, signaling a little bit of a dead cat bounce. Now, for some of you newer traders, you newer investors, I want to kind of, identify and define what is a dead cat bounce. A dead cat bounce is nothing more than a short interval of buying in a macro sell cycle. So we are officially in correction territory. We're down over 10% on the markets across the board, whether you want to look at the S&P 500, you want to look at the Dow, you want to look at the NASDAQ 100, which we're looking at here in the Triple Q's ETF. And what I think is going to happen is I think we're going to get down over 20% on this cycle. Now, there's a lot of things kind of driving that factor. One of those factors is tariffs, and another factor is our administration and just the headlines on social media as a whole. It seems like every which way you want to look, right, left, there's always some new announcement, there's some new headline, a new quote that sells the market even more. Today was literally, from the word go, an absolute just destruction of markets, and it almost feels like it could be coming to an end, but there might be one final blow. And on some particular names like Tesla, today, especially, I was trading Tesla today to the short side. It felt like a mass liquidation kind of period in cycle where you have a lot of people just kind of hanging their hats and saying, I'll come back later when the markets decide to turn around. Okay. And that's kind of what that feeling feels like. Now, I've been kind of telling people inside of Evolution Traders that, to me, this feels like the recession, the / bear market, whatever you want to call it, of COVID of 2020, where it was very violent. It was very brief. It lasted about 3 to 4 months max. And there was a quick V-shaped recovery. I think that Donald Trump and this administration are doing a lot of this stuff to get interest rates to get slashed. And the only way you're going to really have the Fed bring down those interest rates is by essentially tanking a lot of these risk on assets. Okay. So until they kind of hear, or until you kind of hear that, hey, interest rates are going to begin to get cut, until you hear, in the media that there's been agreements on this tariff and trade war and all of these proposals that are going on, where everyone is kind of aligned and okay with what's going on, I think that's when the actual sell cycle will stop. So that's going to be one thing you're going to want to kind of keep your ear to the ground on, fundamental wise. Now, again, here's what I want to make a point of, is just because you have, let's say, 1 day green or even a week's worth of green, do not start calling for the bottom. Okay. Because truth be told, the bottom will not be in until the bulls do a tremendous amount of work and start to close back over some daily supply zones. And what I have here on this chart is a lot of moving averages. We're not really going to get into all of these, but I've got this gray box here and I've got a couple of purple dotted lines. I want to really focus on this $440 area. This would essentially be taking us down about 20% from high to low. Okay. So if we go from 540 down to it's technically 500 or 430, but if we go from 540 down to 430, that's bringing the market down about 20%. That puts us into a full bear market. I think we go a little bit deeper than that and we kind of stretch into this gray zone. And the reason being, if we get into this gray zone, it was major resistance kind of going back into 2023, kind of pulled back a little bit. And then once we broke through, we kind of put on this amazing, 2024 kind of bull run, right? You had a few weeks here of pullbacks. You had a week of pullback here. But essentially, you break this range and we essentially started to run from January of 2024 until where we currently speak and where we put in these all-time highs. So would it be a shocker to me if we pulled back down into this range? Absolutely not. So I've got a lot of things on the table for longer term plays, some leaps, some hedging. I'm completely 100% short biased here until the market can prove to me that we are in a dead cat bounce, and what that would require is a close over a previous day's high. So again, this dotted purple line down here actually matches up perfect with my 200 simple moving average, and that would take us down to about a price of $380 on the QQQ, and that would put us down about 30%. So in a normal bear market, it gets triggered at around over 20%. In the history from the past, we have done things between 30 and 35%. That could essentially be taking us down to a price of 380. That would be an ultimate price target. Maybe even if you sweep this 200 SMA and then kind of reclaim it, you could potentially start to see that recovery there. What I would also look for fundamental wise would be some things like interest rate cuts. I would look for things like the easing of the tariffs, or an agreement that has been reached by all parties that all parties are content with, some kind of slowing down on the process of the Russia and Ukraine situation. And those would be some of the things I would start to look for, where we're now starting to digest that news. Is not so bearish, but more so as, okay, things are starting to turn around. Now, for me, the faster we get down at least into 430, the better. I would like to see an immediate V-shaped recovery, something that we did in 2021. I would like to see that. What I'm not hoping for, or what I'm hoping for that we do not get, I'm hoping that we do not get something that was like 2022, where that took the better half of a year and put us down well over 20, 25, 30% across the board. Because in those type of cycles, it's going to be, selling, and then you might have a week of green and everyone thinks that everything's okay. And then you kind of consolidate the next week. And then the week after that, you go down again. And then the following week, you go green. And then it feels like everything's okay. And then you go down again. Those processes are a little bit more drawn out. That true bear market, it could be anywhere between 12 to 15 months. What I'm hoping for is something similar to the 2020, almost flash crash type of situation, and then an immediate recovery. And in order for us to get that type of V-shaped recovery, you're going to need to see those macro things happen on the outside of the actual charts and the candlesticks, the things I kind of discussed. But you're also going to want to see us get down into 430 and honestly, 415, 400 area quickly. Like we need to see, maybe even if we have 1 or 2 days green, you want to see that next washout come all the way down here, like very, very fast, right? And when I say fast, with inside of a week, you start really chewing up these levels, and then you see another dead cat bounce, and then that's also followed by a lower high, and then you see that kind of capitulation, kind of just, massive sell-off, back-to-back 600, 700, 800 point days on the NQ, back-to-back 15 point, 20 point days on the triple Qs, and then you will probably start to see that rally where you put in that higher low, and then it essentially just kind of V-shape comes back. Now, again, how do you kind of play this market? Well, what you're going to really want to look for on a day in and day out basis is you're going to want to be more sell biased. Now, again, to all of the newer traders out there that are very inexperienced, the first day you get a little bit of green, they're going to say, well, those people, everyone who's going short, look what happens. You guys missed a bunch of money going long. Look at great. You're going to make money one day, but until we start to reclaim, and I'll go to a daily chart, realistically, until, and let's kind of zoom this in, realistically, until you take out a previous day's channel, which today's channel is all the way back up here at $483. Let's call it $484. Until we reclaim $484, you're really not going to see a dead cat bounce. Any kind of, let's say green open or any type of move to the upside is just, a brief moment in time. It's just, let's call it choppiness, right? Because it can get pulled at any time and you will see lower prices. You want to see, your bounce start to close over a previous day channel. So that way you can play a little bit of a gap down off the open. And then once we kind of reclaim that area, you can get long and you can play that dead cat bounce into each area of supply. Now, those areas of supply that I would like to realistically see get taken out would be 490, right? I want to see us get back over a price of 490. That would be your 5-day moving average. Now, you definitely have room to continue a dead cat bounce, well into the 90s, well into 500s, well into 520s, and this is still a macro sell cycle. Remember, under the 50 SMA, prices can get pulled, and they can get pulled very aggressively. Now, this sell cycle is a little different than ones we've seen in the past in my trading history, in my 13 years of trading experience, because we haven't got that dead cat bounce yet. Now, people can say, well, what about, this day we closed green? This is not a dead cat bounce. This is just a pause, right? Again, what's the difference between a pause and a dead cat bounce? The difference between a pause and a dead cat bounce is that this, even though it was green, even though the move was going up in the day, we did not go higher. We did not take out the previous day highs. We did not close back over the 200-day moving average or 200 SMA supply. Okay, we are not over the 5 SMA. This did not take out a previous day's channel, did not take out a previous day's channel, did not take out a previous day's channel. We didn't close over previous day's channel. You start to notice a trend. So you don't have a dead cat bounce. This is just a, almost linear move to the downside here with a few, kind of breaths. Okay, a few kind of natural pauses, natural short coverings of profit in a macro downtrend. Okay, that's all it is. A dead cat bounce would be something like we gap down tomorrow, we put in this bottom, and then it starts to go, okay, red to green. That would be the start of a potential dead cat bounce, where maybe you can start playing some moves to the upside into macro supply zones, and you're going to have specific levels. So the first level over today's high would be 490. Over 490 would be 492. Over 492 is 498. Over 500 is going to be close to about 508. Each one of these areas, you're going to hit a snag spot. You're going to hit a snag spot. You're going to hit a snag spot. And this is nothing more than still putting in that first leg down, followed by your dead cat bounce, followed by your lower high for a continuation move to the downside. Again, that continuation move to the downside that I would like to see before things are over are way down here still. Okay, so they're way down here in this sweet spot. You can see from the levels that I've drawn. This takes us to 20%. This takes us to about between 20 and 30%, and this is your 30%. So this is the mid-range here. This is your 20%, puts you into an official bear market, and this puts you into probably the end. So something like this, right, a dead cat bounce that maybe even test and reclaims the 50-day moving average for a day could get faded and then would act as resistance once more for this move down. And that would be the move that I would like to personally see, be the end of the road here for some type of V-shaped recovery. Now, again, how long this is going to take to play out doesn't have to really necessarily take that long. Again, with a 20-point decline in one single session, with our average daily decline on an ATR on the daily time frame being about $12, 12 points, you can definitely get down 20% in 3 to 4 days. Okay, So within 3 to 4 days of just pure selling, even if you have 1 or 2 days of a dead cat bounce, in just 3 to 4 days, you can be here. Okay. Now, when we get here, I'm going to fully expect some type of bounce in your second dead cat bounce if you get it. If not, the recovery to start from there. Again, you might see where you look like you're going to get that dead cat bounce, and then you kind of just consolidate at those prior lows, which are acting as support for that first dead cat bounce, to then kind of just wash us in here. And if we do get that wash in here, this is 100% where you want to look for those macro fundamentals to start to change in terms of the narrative of what's going on economically, not only in the United States, but in the world as a whole. So one thing I want you guys to focus on is all of our supply is now ahead of us. Okay. It's all above us. So until we at least get back over the 5 SMA and the 20 SMA, you got to pump your brakes on calling for bottoms. Okay. Because as much as people feel that this has been a big move down, which it definitely has, the market is on a just raging bull path since essentially 2021, with a brief 12-month sell cycle in 2022. So for the better half, coming out of 23 into 25, we've been on a 2-year upwards pattern, which you can kind of see if I zoom out a little bit here, right? And I zoom just way out, you can see the overall trend going all the way back to 2024 has been up. Right now, even though this is a nasty pullback, if I was to draw a trend line, right, just this uptrend line, we are still on an upwards trajectory, right? So being that we're still on this upwards trajectory, you could definitely start to get that dead cat bounce here. Again, what I would watch for off that dead cat bounce is if it does start to get rejected close to that 50 SMA, and if we actually break these lows, then I'm fully expecting us to get down into this territory, and I think this is when things end. And if I was to really look at it again with considering that you are going to get a few days sprinkled in where you do close green and you do have some phenomenal bounces, I would say that this is probably going to continue to play out to the downside, and you're not going to really see any type of recovery for the month of March, and could actually be pushing you well into mid-April before you see some type of recovery. And again, if we start to go well beyond April, we're going to have a future discussion there, because we're going to have to look at macro wise and fundamental wise exactly what is going on, right? But I don't think that they want this to last too long, meaning I don't think that this administration and the plans that are being set forth by President Donald Trump are going to want to kind of expand over the next 12 months. I think they're going to want to kind of get this market down enough so we can cut rates quicker to bring those rates down, so we can start to, essentially get that money printer back on. And once that happens, you are going to see a massive influx in some of these risk on assets. Okay. So again, what is your best opportunity to, essentially get rich in this cycle is to be very mindful of where we are going down to and where you're going to want to be dollar cost averaging in, because the next run up, whenever, whether it takes 1 month, whether it takes 6 months, whether it takes 12 months from now, is going to be very, very significant. And if you're buying back here, the normal person will say, well, if we were just trading at 540, I'll wait until we get somewhere close to that 540. And then, now I'm going to start to trust the market. Well, guess what? You have already probably missed about 3/4 of the move. And that's why your average retail investor and retail trader is always late to the party, because once you do start to make those all-time highs, it's not that long after where you go into a period of consolidation and you start to actually, trend down a little bit before coming out again. And it's kind of like, well, how come I just got in and everything is starting to stall? Well, because realistically speaking, the move that you are ready to start buying way up here is starting to happen now. Okay. And this is when you're going to want to be extra patient, extra smart. So that's just my thought process. Again, I think we got a lot ways to go. I do think that you can see some sprinkled in green days along the way. Again, as long as the triple Qs are underneath $518, or as long as these triple Qs are below the 50 simple moving average, I am going to continue to be more sell biased until the bulls prove me otherwise. There is no ifs, ands, or buts about it. Does that mean that I'm not going to partake in a long position on a dead cat bounce for a quick day trade in and out? Of course not, right? If there's a good opportunity and I see us starting to take out a previous day's channel, which means we're getting over a previous day's high, and I have room into macro supply, I will take that trade, but I'm not calling for the bottom just because that move set up. I hope that makes sense. So with that being said, hope you guys all enjoyed the video. If you guys are prop firm traders and you would like an 80% discount with Apex, you can use code DAnthony. That link is down in the description box below. If you guys would like to join Evolution Traders and get access to my day trading course, what goes over all my strategies and mindset, that link is down in the description box below. And I will see all of you guys on the next video.